Hey, morning traders. Thanks for tuning in. Welcome to Morning Cup at 8. Aiman here. Right. So looking at the S&P 500 today, so the index took a breather from the recent rally, declining 8 points to close lower at 6363 points. Also, if you notice, the index has now breached the lower uptrend channel, signaling a correction trend is progressing. So we believe that the sentiment is a bit negative for now after the Fed Powell signal that the Fed isn't ready for any cuts yet, but still assessing the inflation from the tariff impact. So technically speaking, uh, uh, if the pullback to continue further, the index might decline towards the 6,300 support level. Right, so looking at the US trading stocks that we have published overnight yesterday, we have Cloudflare, stock code NET. So the stock has breakout above the 195 US dollar level on accelerated trading volume. So if the momentum to hike further, now that we can expect it to test the next resistance at 215 US dollar level before it climbs higher towards the 230 US dollar level. Now, if the momentum to reverse and form a new lower low, make sure you have your stop loss at 180 US dollar level as it indicates a possible change of trend. Right, so up next we have Alphabet, so called GOOGL. So if you can see, the stock has climbed higher and break out above this 195 US dollar level. So looking at the market structure and also the moving average line, we believe that it is the best time that you can hop on the current trend. Right now, if the price continues to breach higher above the 195 US dollar level, we might see that the stock to touch at 210 before it might travel higher towards the 225 US dollar level. So a reverse below 185 would open the door for a deeper correction. Right, so looking at the Hang Seng Index Futures HSIF, so the index further retrace below the immediate resistance, losing 320 points to close at 25178 points. However, if you see here, the market are still trending in a bullish trend, and the pullback seems to be a normal correction. So, in terms of sentiment, the Hong Kong market remains volatile. Well, yesterday's closing slumped to end with the bearish candlestick. So, this was after the third round of the negotiation doesn't show any progress. So I believe at this juncture, for China, the tariff trust still expiring on the August 12th. Right. So for now, we keep our positive trading bias unchanged. We expect to see the market to reach 26,000 point level if the bullish momentum to follow through in the coming session. But if any pullback to happen, we expect to see the market to retrace at least towards the 25,000 support level. Right, looking at the WTI crude oil price futures, so it has recouped half of the losses since the 23rd June. Well, regarding the Middle East war, so on yesterday's session, the WTI crude oil futures added 79 cents to close at 70 US dollar dot. So, so positive sentiment still escalating in the market with tighter supply concern as Russia was pressured to end the conflict with Ukraine. Well, otherwise, US will impose a secondary tier of tariff on any countries that trade with Russia. So at this juncture, we see that the WTI crude price still macro-driven, and any further upside would be kept at around 73 US dollar level. So in regards to that, do watch out for any profit-taking activities, which could drag the price towards the at least 67 US dollar level. Right, back home, looking at our FPLI here, so it has resorted to sideways, trying to breach below the consolidation zone. However, the index yesterday closed slightly lower at 1528 points. So we believe the sentiment now remains cautious in the Asian market, specifically in the Malaysia. So sentiment was weighed down by the conclusion of the US-China trade discussion, which was failed to show any significant impact. So, right, looking at the sector performance day to day, yesterday, the top gainers was coming from the industrial production sector, gaining 0.95%, followed by the Reit sector at 0.33%. However, the top losers are coming from the healthcare sectors, followed by the construction sectors. So if you look at our watch list for today, we have added LFG and also together with MC Man in. Also, if you can see, we highlighted Coraza previously, and yesterday we saw high trading volume kick in for Coraza, and it went up almost 6%. Do watch out if the stock to breach higher in the coming session at 51 cent level. Right. Moving on to our Malaysia trading stock. So today we have MC Man or Malayan Cement. So the stock has experienced a breakout, a bullish breakout at 5.45 cent. Supported by the strong trading volume. So we expect the momentum to sustain and climb further to test the next resistance at 5.70 cent, followed by 5.90 cent level. So if it happen to break up below 5.25 cent level and form a new lower low, this could indicate a near-term pullback. And up next, we have Lenson Fit Group. So the stock yesterday has tested the resistance at 1 ringgit and 15 cent on a strong trading volume. So should the momentum to hold and break out above this resistance at 1 ringgit and 15 cent in the coming session, the counter potentially testing the next resistance at 1 ringgit and 25 cent, followed by 1 ringgit and 35 cent level. And again, if it drop below 1 ringgit and 5 cent level, this will open the door for further correction phase. So we have one breakout stocks, which is Malayan Cement, and also one pending breakout stocks for Lenson Fit Group. Right, moving on to the FCPO. So the commodity extended its rebound to close higher at 4,277 ringgit. The climb being 23 ringgit. So bullish trend still remains intact, judging on the uptrend channel here. So we still hold our positive view for the FCPO, and we believe that the resistance at 4,400 is achievable after the commodity has found its support and rebounded at 4,200 level. So sentiment at this current juncture is still positive. Right, so I'll stop here and pass the floor to Iftaar for his company update. All right, thanks everyone.
Yeah, thank you, Aiman. Good morning, everyone. So we have a company update on IOI. So post meeting with management, we are positive on the outlook for IOI, given its strong upstream earnings, as well as ventures to diversify its income streams. So on the FFB growth, IOI achieved plus 1% FY25 growth, and this is slightly below our estimates. For FY26, however, management is guiding for plus 3 to plus 4% in growth and is expecting July to start to pick up and also a peak output in August to September. So unit cost is also expected to be somewhat flattish or just a slight increase. And this is after taking into account the full impact of minimum wage and as well as the 2% EPF contribution. So moving on to its new ventures, there are three new ventures that IOI is targeting or so the first one is the Crest solar projects. IOI has submitted bids to win the solar projects, even though they highlighted that the return on solar projects is not as attractive as before. And secondly, IOI has also 30%, 33% stake in the park projects with Next Green Global. And this is going to be operational in 2028 to produce park products in Pekan. So this JV with Next Green is expected to have a contribution EBIT of around 30 to 50 million per annum. And lastly, I has also ventured into coconut plantation business, planting currently about 3,500 hectares. And this is going to bring them an EBIT contribution of about 60 to 70 million. And this is based on the current coconut prices and as well as taken into account the full maturity of this coconut plantation. So right now they are still waiting for the coconut to be fully mature within a within a couple years. Sorry, within a three to 4 years. So lastly, we maintain buy on IOI with a target TP of 4 ringgit and 30 cents. We continue to like IOI because of its more stable downstream ventures and more interesting new ventures to diversify its income streams. And this brings to an attractive valuation for IOI, which is trading at 17.5 F126 PE, which is at the low range of its peers of 17 to 22 times. So IOI is one of our top picks for plantation. Yep. So that is all from me. Thank you. I pass on now to UJ for its Reit's results.
Okay, thanks. So we have Axis Rate first half result today. We are still keeping our buy call with a higher target price of 2 ringgit and 23 cents. So basically, Axis Rate first half results were in line with expectation, supported by contribution from its FY24 acquisition. Year-on-year, first half revenue rose 18%, driven by contribution from the bulk of 719 million acquisition completed in second half 24, along with higher occupancy rates and positive rental reversion across their existing asset. First half NPI margin expanded by 1.3 percentage point year-on-year, reflecting the strong operating leverage from stronger top line performance. For Q-on-Q, second quarter revenue and core profit were flattish Q-on-Q due to the absence of new acquisition during the quarter. So, in terms of outlook, we expect third quarter revenue and earnings to remain flat Q-on-Q due to the absence of new acquisition completion, while the full year FY25 numbers should see a strong year-on-year growth given the full year contribution from assets acquired in FY24. And beyond the immediate term, we believe Axis Rate is poised for further inorganic growth underpinned by a lower interest rate environment and a healthy gearing level of 33%. On the downside, we see limited impact from the recent SST expansion as the REIT long-term master lease and strong tenant base, mainly comprising of well-established MNCs, should be capable of absorbing the incremental tax-related costs. Post-result, we are maintaining our forecast, but we raise our target price to 2 ringgit and 23 cents after we update our cost of equity assumption. And we are still keeping our buy call. We like Axis REIT as a proxy to stable outlook of the industrial property sector, a strong track record of inorganic growth, and a healthy gearing profile. That's all from me. I'll stop here and then see you guys again tomorrow. Thank you, everyone.